All right, I decided to do a video today because I promised my group, and I hope my computer starts to. There you go. That's better. All right, that's fine for now. Um, yeah. So what I promised my group is basically to explain a little bit of what I learned from Gann. So I've finally completed the commodities book. It's about a 500-page book. It's basically a big Bible. And W.D Gann, his book is it's really good, but I mean you have to digest it, right? And so the way he explained the price action, this pattern right here is basically the same thing that he explained. So as you guys can see, I posted a picture in the Discord, like this, and let me know in the comments what you think about this picture, if you don't mind. Uh, uh, Commenting and thinking, I'm trying to bring you guys the most value as possible, and so videos or pictures, are they better? So I'm gonna go ahead and explain what I mean here by overbought, and this is gonna be the start because this is what W.D Gann was talking about, and then basically we have a move, a reversal. And so overbought, what it means, the way he defines it, which was beautifully put, is overbought is where and when the public, which is dumb money, right? The not to offend anyone, but the public is basically, there's smart money and there's dumb money. Smart money is the institutions and whatnot, the hedge funds. Public is dumb money. It's more like retail traders, what they call retail traders. And so the smart money, they work on plans, and they kind of know. And what we're going to actually uncover today in today's video is going to be the cause of price action, the reasons for the patterns to form in the market. And so I'm going to try to bring you guys a little bit more videos when it comes down to it. But I'm still studying, and I'm still like really organizing the knowledge, condensing it, and I'm almost done, and ready to really trade all these strategies. This is what I'm building, is basically how to apply the knowledge, right? By building strategies and whatnot. So like, how could you have anticipated this? And it's basically, that's what we're gonna talk about. It's where the longs and the publics over leveraged. They have too much and they bought too much, and also where the shorts covered. And where the shorts cover is kind of obvious a lot of times, because it's basically the tops here and the tops here and stop losses. And so whenever the stops are done, and then the shorts, basically the short traders, have longed, that's the tops of the markets. Yes, it's the highest, but it's the weakest point technically speaking. Okay, so it's the weakest point technically speaking in the market. And so what happens after is one of two things. There's a huge sharp decline, which is what we got, or it's a slower decline that has to correct, and it takes more time, right? Because time is very important when it comes to trends. Very extremely important. And we're not going to get too much into time in this video, but it's extremely important. And one principle of time that we're going to talk about today is if it's a sharp move down, it corrects the weak technical position, okay? And you want to use the time turn trend rule here to forecast when the trend is going to turn up or when the trend is going to turn down. You want to wait for confirmation. So Gann talks a lot about 1, 2, 3 or more days for this rule right here, time turn trend. And I have to go take a look at my notes once again to really understand what's going to go on. But I think what he meant to say is that it goes up 3 and then it goes down 3 in days. But guys, what I wanted to really point out for this video, what I found is that we have similar price action, as you can see in the picture that I've pointed out, and it's that this right here was basically the same pattern, right? Kind of. And so we got a huge sharp move downwards. It took less time though up here. I mean, this took more time. And then this one was just one huge day. Bang, done. And so what happened is that the prices came back. It stayed here for 1, 2, 3 days. They couldn't break the top. They couldn't break the top of the previous candle. And that's why it's really important, guys. You have to understand the shorts and the sellers right now are defending this price. They, in their mind, believe that this is the best price that you can get for it. Shorting, okay? Shorting and selling. And that they're going to probably have a stop loss right here. And so they're really defending. You know, they're because if we break this, there's going to be a short squeeze. It's going to come back up. And this is very possible that we have a double top or something like that. And I think that's what Gann said in his notes. Okay. And so this is a possibility, guys. Very strong possibility, actually, that we follow a similar pattern. Use a tight stop loss if you're still watching this video in time and you want to short the market. Okay. And then the next move downwards right after on the third day, which is today. This is the day that we're talking about. So you're expecting a down candle, okay? But here's the thing: you use a tight stop loss, and if it goes up, no problem, you know. But your risk reward is so much skewed in your direction that you should be fine, you know. So it's about a 10-to-1 RR or more, and so. Prices came back down. And here's the interesting thing. This is another pattern that Gann developed. Is basically called a secondary rally in a bear market. Secondary rally in a bear market. Okay, and then it came back down for 3 moves. And he also has another way of counting the waves, which I like very much. Because he doesn't care too much about the rules. He cares more about the price action and understanding the cause and the effect. His focus is on understanding the market and the behavior of the traders and whatnot. But when you're talking about Elliott waves, you're more focused on the rules and counting waves and stuff instead of actually understanding what's going on in the market when it comes down to volume, price action. And so that's how we're going to trade. We're going to trade by understanding what's really going on in the markets, guys. And I hope you guys like this video. Definitely subscribe to the channel if you haven't already. Please go ahead and leave a comment on if you did like this video, because that definitely helps out the channel as we're trying to grow it, right? We're trying to grow it with good knowledge, guys. I mean, my specialty is going to be with Gann. And again, I'm going to try to raise funds for astrology and to buy basically Gann had a bunch of knowledge on astrology and time and how time actually affects trends. And it's going to be very good for us. If I can stay consistent, I believe I can raise some funds for that cause, and study astrology when it comes down to it. And so I think it's going to be like 400 USD for the books, and then there's a course by the same Gann publishers that I got the books. Those are the only ones that I trust. For his course on the stock market and commodities, and which I would share with basically the whole community, and it's about like I think it's like about 1,100 USD or something like that. You know, it's pretty pricey. So all together, it's like 1,400 that I have to raise, plus or minus. I have to go ahead and do that. Maybe like round it off to like 2K, you know, and so yeah, get the good knowledge so that I can actually provide. But yeah, we do with what we have right now, and that's why I'm organizing the knowledge, and so. And then also gonna have some really good risk reward strategies and stuff like that we have posted in the groups. I have put them private so far. Right now, these 3 right here, these are strategies, guys. Just because we didn't really have too much interaction with them, and I don't want to just give it to you for granted, you know, for you to take for granted, because it's actually like These are like really good strategies, guys. Like, you have to understand, like, so I kind of believe in when you give someone something for free, they don't really appreciate it, or they take it for granted, kind of thing. So we'll see, we'll see. But yeah, that's what I wanted to explain to you guys today. It's the pattern that Gann was talking about in in the commodities book. It's exactly this pattern right now, and so it could play out like this, right? Another leg down, or it can play out like as in we come up and we do some type of double top. Okay, so now if we go ahead and we understand that this was overbought, there's short covering right here and over leveraged longs, what I would do if I was trading on a lower time frame and to get a very precise point, I would go on a very low time frame, guys. Maybe 5-day or the monthly. Okay, and then what else do you do? You have to understand that you use a simple trend line, right? Because this is basically your breakout point, and you have to think about the traders, right? This is the cause, this is volume right here. Okay, and by the way, this trend line extends to that point right there too. So, but anyways, so prices came back up, it broke out. This is where shorts cover, right? This is where shorts cover a lot of times, because they thought it was going to go down. They're down like 5%, or Fibonacci, whatever they entered right here. Regardless, they cover. So what they do, what does that mean? It means they buy. So they buy the breakout, basically. The longs traders do the same thing. This is shorts, definitely over leveraged right now, if you can see at the bottom right here. So it went down, but it was a very good entry right there if you guys got in right there. I think that was one of the strategies. This one definitely was. This was an strategy. So you would have got filled there. You would have taken profit like right here, I think. And so it came back down. This might have been another entry, maybe not. But anyways, that's why I like using the is basically Fibonacci retracement, this one right here, because it helps you understand when you're the balancing, like a scale, right? Like a scale, balancing of the scales, like the Libra sign. The Libra sign is something that we're going to get into if we actually do get the funds to invest in astrology. This is like really, really important stuff, guys. Today, like September is the Libra month, right? And so yeah, like I was born in September, so I know a little bit about that sign, but and how the sun kind of affects us as human beings and everything like that. So it's really important for us to actually get that knowledge on astrology. So that's why I will raise funds for that, and for the courses. All right. But yeah, like definitely promote the channel if you haven't already. Like even if you could like maybe send it with a few of the trusted people that you do, like build a team and stuff like that, so we can actually focus properly on the right strategies and stuff like that. Okay. But yeah, basically this was a double bottom, which Gann is a huge fan of double bottoms, guys. I mean, huge fan. There is another one right here too. This is what we have right now on the daily chart, right? Like we have, we'll go back, but I just wanted to finish explaining that, okay, the shorts covered, came back down. This was over leverage shorts. They covered again, and they're just covering and then they're longing. So then the public becomes over leveraged longs. So if we go back to the daily chart, and then finally right here, when there's no more buying, there's no more buying. This was really, honestly, it's kind of surprising how fast it just did it. This must mean that time was done, and a lot of people know the strategy. Like that's what it probably means. Like, or there's just big money, one big whale that just dumped. So let's take a look at the daily chart, and what I was talking about by the high right here is that these shorts are going to be defending just like they did in the past. Look, This one right here, the shorts were so strong that it didn't even break. It didn't even get your stop hunt because they were so strong that it came back down. So that's what we're going to expect. What's the timer ticking down? So UTC still has like 22 hours, you know, so just be cautious for the long side. If it breaks there, you're a little bit more trend change, you know, but so the shorts are definitely going to be defending right now, I think. So yeah, I hope you guys like this video, and again, stay tuned for any further updates. All right, peace.